Chairman, directors and shareholders, good morning to all. I welcome you all for the 85th annual general meeting of Rajapalayam Mills Limited, which is being conducted through video conferencing as per the circulars issued by Ministry of Corporate Affairs and SEBI. The company has provided live webcast of the proceedings of the meeting through CDSL platform. I request the respected chairman to preside over the meeting and introduce the directors and other attendees joined through video conference.
So, good morning, everybody. I welcome you all to the 85th annual general body meeting of the company, Rajapalayam Mills Limited. I welcome the directors participating through video conference. I welcome Justice Shri PAS Janathan Raja, Chairman of the Audit Committee and Nomination and Remuneration Committee, Srimati PV Nirmala Raju, Shri SS Ramachandra Raja, Shri NK Ramaswamy Raja, Shri A.V. Dharmakrishnan, Shri P. Santana Raman, K.B. Nagendra Murthy, Srimati Saundara Kumar, and Shri Abhinav Ramasubramanya Raju. I welcome the statutory auditors and secretarial auditor, Shri R. Palaniyappan, partner, M.A. Jayaraman and Company, Shri P. Santanam, partner, Messrs. S.R. S.V. Associates, and Shri M.R.L. Narasimhan, secretarial auditor. I also welcome the executives, Mr. N. Mohan Rangan, Chief Operating Officer, Mr. Guruswamy, Jnana Guruswamy, CFO, and Arul Pranavam, Secretary of the company. I confirm that the requisite quorum is present. Call the meeting to order.
Thank you, sir. Shareholders are hereby informed that the registers as required under the Companies Act 2013 would be made available for electronic inspection by the members. Members seeking to inspect such registers can send their request to arulpranavam_a@ramcotex.com. Notice convening the 85th annual general meeting along with directors report, business responsibility report, statutory auditors report, secretarial auditors report and financial statements have already been circulated by email to shareholders and hosted on the website of the company and the stock exchange. With the consent of the members, the notice may please be taken as read. Statutory auditor's report as well as secretarial auditor report being an unqualified and unmodified one and have already been circulated along with the annual report. With the consent of the members, the auditor's reports may please be taken as read. The e-voting process had been explained in the notice convening the annual general body meeting. For those persons who have acquired the shares subsequent to the dispatch of the annual report, the notice for the AGM containing the instructions for e-voting and participating in the meeting through video conference had been mailed to the shareholders individually. The facility for remote e-voting remained open from 9 a.m. on Sunday, the 22nd August 2021 to 5 p.m. on Tuesday, 24th August 2021 to enable the shareholders to vote through remote e-voting. The remote e-voting was closed at 5 p.m. on 24th August 2021. In addition to remote e-voting, arrangements have been made for e-voting during this AGM, and members attending the meeting through VC and who have not already cast their vote by remote e-voting may exercise their voting right during the meeting. Members are informed that those who have already cast their vote by remote e-voting may attend this meeting but shall not be entitled to cast their vote again. Now I request the respected chairman to deliver his speech on the annual accounts and performance of the company.
Good morning, everybody. It is my pleasure to give the address of the 85th annual general body meeting of Rajapalayam Mills Limited. The financial year 2021 was a very challenging year due to the unprecedented spread of COVID-19, which affected all of India and rest of the world. Customer spending, especially towards discretionary items like clothes, fashion, articles, etc., had taken a hit due to lockdown announced by the government. The demand for textile products, especially garments, was very weak. Practices like work from home, restriction in conducting festivals, marriage functions, etc. The global economy contracted by 3.6% in the calendar year 2020, as compared to a growth of 2.9% in the previous year. The Indian economy too was no exception and contracted by 7.5%, for the financial year 2021 against a growth of 4.2% in the previous year. The company for the financial year 2021 production volume decreased by 111 lakh kgs as decreased 211 lakh kgs as against 122 lakh kgs of the last year due to lockdown imposed by the government for 2 months during April and May. Despite the adverse conditions prevailing during the first 6 months of the financial year under review, there was no slowdown in the company's focus on new product development, innovation, and cost-effective production. In spite of production volume by 9%, the company was able to achieve growth in sale volume due to liquidation of stock. The sale volume for 2021 stood at 122 lakh kgs as compared to 119 lakh kgs of last year, a 3% growth. The sale value of yarn had increased to 363 crores during the year 2021 as compared to 347 crores last year, registering a growth of 5%. The overall revenue from operations has gone up by 15% during the year 2021 to 412 crores from 358 crores last year due to additional turnover from fabric unit, which came into operation during the financial year 2021, giving a growth of 15%. The operating profit had increased to 40.75 crores as against 39.75 crores of last year. The interest cost has gone up during the year 2021 due to the newly commissioned fabric unit. There was a subdued demand for fabric due to lockdown. Fabric unit had reached its optimal level utilization only during the fourth quarter of the financial year 2021. Because of this, there was a net loss after tax of 26.63 crores during the financial year 2021 as compared to a profit after tax of 6.41 crores during the previous financial year. Windmills. The company has windmills with installed capacity of 35 megawatts for its captive power consumption. For the financial year 2021, the wind farm has generated 564 lakh kilowatt with a value of 37.59 crores as compared to 596 lakh kilowatt, the value of 39.62 crores for the previous year, a reduction of 5%. The wind availability velocity during the financial year 2021 was low as compared to the financial year 2019 to 2020. Your directors have recommended a dividend of ₹0.5 per share, that is 5%. Previous year was ₹1 per share. The total amount of dividend outgo for the year will be 43 lakhs. As per income tax, the dividend will be taxable in the hands of the shareholders. Rights issue. In order to fund the various capital expenditure proposals, the company has decided to raise equity shares for an amount of 69.95 crores by way of rights issue, the ratio of 1:6. The issue had been opened on the 15th of March 2021 and closed on the 30th of March 2021 with a subscription of 115%. The company has made allotment of equity shares raised through the rights issue on 9th April 2021. The shares have been approved for trading by the BSE Limited with effect from 15/4/2021. On behalf of the Board of Directors, I thank all the shareholders of the company for reposing their faith and confidence in the management by showing their overwhelming response to the rights issue. Outlook for the current year 2021. Retail sales of textile products, especially the home textile segment across the globe, is witnessing a strong comeback. The demand, along with lower levels of inventory, retailers expected to boost the demand for yarn the current financial year 2021-22. The company has reshaped itself to better position by strengthening its product lines, more value-added and custom yarns like mercerized yarn, melange yarn, whole yarn, etc. to take full advantage of the current market trend. The company is continuously monitoring various process parameters. It also implements various systems control to deliver consistent quality of yarn and fabric to its end customers. The fabric unit commissioned during March 2020 is successfully running with a capacity of 122 looms. Though there was a subdued demand for fabric due to lockdown imposed during the first half of financial year 2020, it has started picking up from the fourth quarter. Fabric units also producing special fabric, value-added fabric, almost jacquard looms, and the quality is well appreciated by the customers. The unit has produced 41 lakh meters of fabric, and total revenue generated by the fabric unit for the financial year 2021 was 39 crores, out of which the export turnover was 11 crores. The company expects better revenue and profitability from the fabric unit in the coming years. Actually, the fabric unit will be coming close to its potential in the current financial year and improve further the coming financial year. Because even this financial year, lockdown had subdued the demand for a high-end fabrics, which did have an impact on our sales. But it has started picking up again now. And we think in the coming financial year, the investments should be much better. Modernization and expansion for the company. As part of a continuous thrust on modernization program, the company had decided to replace all the old open-end spinning machines with modern fully automatic open-end machines at a cost of rupees 45 crores. The company has already received these new machines, and the installation of all machines was completed during April 2021. The installation of these machines, the company focused on selling the OE yarn to different value-added segments, like OE yarn for knitting segments, denim segments, etc., which were untapped by the company so far. The company is currently having one mercerization machine with capacity to produce 60 tons of mercerized yarn per month. The inquiries for mercerized yarn to a superfine count segment has improved, and hence it is proposed to increase the production capacity of mercerizing yarn from 60 tons to 180 tons per month. The second line of mercerizing plant will be commissioned by the end of this month. That is August. The third line will be commissioned by the end of January 2022. With this, the amount of value-added yarn and other prospects should dramatically improve. In order to take advantage of the current higher demand for yarn, the company is implementing expansion in spinning by adding 18,000 spindles, Rajapalayam, by utilizing the existing building space, and also with no addition to overheads. The company is also implementing an expansion project in the fabric division by adding 32 jacquard looms, which will increase the existing loom capacity from 122 looms to 152 looms, thereby bringing the first phase of a project to full capacity and making sure that we can have good EBITDA from the fabric unit. The existing bag process machines are sufficient for the expanded loom capacity. The additional looms will commence commercial production during the last quarter of this financial year. The total outlay for all the above capital expenditure proposals is 180 crores, which will be funded through the proceeds of the right issue, internal accruals, and bank loans. The company's strategic decision to focus on more value-added yarn counts has started yielding results, and good volume of yarn orders. Value-added counts has been booked in the first 2 quarters of this financial year, and a good policy for purchase of cotton to handle these orders will help us sustain the margin for the current year 21-22.
Thank you, sir.
Now,
Question and answer.
I now ask for the question and answer sessions to be started.
With the permission of the chairman, I would like to open the session for question and answer. Members are hereby informed that the company had made necessary arrangements for the two-way communication in the meeting. Members desirous of expressing their views or ask questions during the meeting have been requested to register themselves as a speaker by sending their request at least 3 days prior to the meeting. One shareholder has registered as speaker for today's meeting. I invite Mr. Naveen Sharma to speak. Karthik sir.
Hello.
Mr. Naveen Sharma, you have been unmuted. You can speak.
Am I audible, sir?
Yes, yes. But you're quite faint.
Am I audible now?
Better.
Okay. Good morning, everyone. I hope everyone is safe and well. My question is, can you please comment on the sustainability of the current cycle? What are the reasons behind the uptick for the industry, and which of the factors are sustainable? What are the revenue potential for the full utilization of the expanded capacity and the value additions? What are the timeline for the full wrap up of the expanded capacity? And last one, the current prices, what are the margin potential post expansion at the full utilization and the value additions?
Okay, thank you. Shall I start? Can you hear me?
Yes, sir.
So thank you for your questions, very pertinent questions. I think the current cycle has for the textile industry has actually been very good for the knitting segment and the home textile segment. And we have been able to take advantage of that through our yarn division because we have very good customers in both these segments. We have been able to take advantage of that. So it is very difficult to predict how long these cycles will last, but your company has taken measures to make sure that we go beyond these cycles by investing a lot in value-added yarn and specialized yarn and so on. So about 30 to 40% of our production now is geared towards these value-added and specialized yarn, and many of our other yarn segment is actually geared towards very specialized customers. So even if the cycle goes down, our pricing power should not come down that much, and we should be able to sustain fairly good margins, even if the cycle comes down. But having said that, we also believe that the shirting segment and the value-added fabric segment, which we had invested in a fabric plant, that segment had not grown, but we believe that segment will start growing late in this financial year and in the coming financial year when people start going out of their homes. And many of our customers who are fabric manufacturers for the shirting and garments, the weaving segment, are saying that many brands across the globe have started inquiring and giving larger orders. The brands have now changed their strategy to source materials from more than one country other than China. And India, being the largest producer of cotton, has become a natural choice. So I think we are in the right place and we should be able to take advantage of that. And that is one area. I think, address the cycle issue. And all the projects which we have currently invested in, the 180 crores, all those should be completed by January this year. So the full advantage of all these investments and the value addition and everything will come into force by next year. And also, given the fact that the woven garment segment is also expected to become steady and good, and given the inquiries we are getting, the turnover for the company is expected to be at around 700 crores in the next financial year with these investments, which is a fairly big jump from the previous year, about 40 or 100 crores last year. This year we are expecting 500 crores. So from 400 crores to 700 crores is a very big jump. And we also expect the fabric unit to become profitable the next financial year because we'll have full steady production coming through. And also the new looms and everything will actually take care of the overheads for which we had already invested. So that way the outlook for the coming year looks promising. And what was our question? Yeah, like I said, I've also addressed the timeline. By quarter 4, all the projects should be finished. Then we should be able to take full advantage in the coming year. I think I've addressed all your questions. Anything else? I think we have had only one speaker. So I now have the secretary to proceed with them.
Thank you, sir. Thank you, sir. The following business has been proposed for members' consideration and approval through e-voting. Ordinary business. Resolution number 1. Adoption of company's separate and consolidated financial statements and reports of the Board of Directors and Auditors thereon for the year ended 31st March 2021. To declare a dividend of rupee 50 paise per share for the year 2021. Reappointment of Srimati P. Nirmala Raju as a director who retires by rotation. Reappointment of Sri P.R. Venkatrama Raja as director who retires by rotation. Then special business, special resolution, reappointment of Sri P.A.S. Alagar Raja as an independent director for the second term of 5 years starting from 11th February 2022 to 10th February 2027. Special business, ordinary resolution, ratification of remuneration of rupees 1,50,000 to Sri M. Kannan, cost auditor of the company for the year 21-22. E-voting system will remain open till 15 minutes after the conclusion of the meeting for the shareholders who have not already cast their vote by remote e-voting. Sri R. Palaniyappan, partner MS Measures N.A. Jayaraman and Company, Chartered Accountants, is the scrutinizer to scrutinize the voting taken through electronic means. The results of the remote e-voting or venue e-voting would be announced to stock exchange and displayed on the website of the company within 2 working days. Now I request our respected chairman to give vote of thanks.
So I'd like to thank all the members, shareholders, directors who have shown confidence in our company, for participating in this meeting. I also like to thank my team, CEO, Mr. Mohan Rangan, CFO, Mr. Yanagurasamy, and our secretary, Mr. Arun, for taking this company forward. And I look forward to the good prospects of the company. I also like to thank Mr. Karthik of CDSL and his team for organizing this meeting in a smooth manner. Thank you very much, and I bring this meeting to a close.
Thank you, sir.
With the permission of chairperson, we are concluding this meeting. Thank you all for joining. Thank you.
Thank you.
Thanks.